Hello, everyone. My name is Primo, and I'd like to welcome you all for coming to today's webinar. Thanks a lot for coming today. Sorry about the little sound issue we had there in the beginning. This promises to be a very informative webinar. I'm going to give you a lot of information on how to construct and form some of my top trading strategies so that you can fit them to your trading. But before we begin, just want to make sure everyone is hearing me okay and that you can see the picture. We can officially start after that. All right, looks good then. Great. Once again, welcome, and thanks for FX Street for inviting me to speak. As I said, it's going to be a very informative webinar, so get out your pencils and paper. I'm going to give you some information that will really help, I feel, in my opinion, advance your trading. Now, for those of you who aren't familiar with Specialist Trading or myself, Specialist Trading is a premier online educational website where I give courses in trading in the Forex markets as well as the stock markets and the Emini markets. I share with you all of my strategies that I currently use. Just to give you a little background about myself, I have been actively involved in trading the markets for over 33 years. I began my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I left the floor in the 90s to continue trading my own account to manage money, and most recently in the last year or so into teaching. That's when Specialist Trading was formed. Now, even though my background is with stocks, the fundamentals and the real gist of everything I learned on the floor can be applied virtually to any market and to any time frame. So what I'm going to be teaching today works just as well on the Forex markets, and I'll show you some examples of how that works. And we'll show you, some trade examples and how you can use these methods in any direction and in any time frame. So what we're going to be discussing today is basically my top Forex trading strategies. Now, these are the methods and techniques that I'm going to be sharing with you. I'm going to be giving you step-by-step techniques on how to construct and use these for your own trading strategies, or you can actually use these strategies in the future. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results. As I said, I'm going to give you a lot of information, but remember, I can in no way guarantee that any of the performance results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention that we will have a question and answer period, but I please ask that you wait till the very end. I've been giving presentations and webinars for a while, and it seems to flow a lot better, and the information it comes across a lot easier if we wait till the last 10 or 15 minutes. So I'll speak roughly about half an hour, and then the last 10 or 15 minutes I'll answer any questions you may have. I'll also, if we happen to run out of time, don't worry, I'll give you an email address as well as a phone number where you can contact us. And I also believe that this presentation is being recorded by FX Street, so if you want to go back and look at anything over again, you can always do that. Okay? Now, as I said, I was, originally a specialist. I traded stocks, but all of my information and methods can be transferred over very easily. In fact, they work tremendously well. Sometimes they actually work even better in the Forex markets than they do in the other markets. And I think the reason is that these methods and techniques I'm going to be sharing with you are basically universal. From teaching and from trading for so long, I see that so many traders have a difficult time trading because they're really getting involved or piling too much things on their trading plate. They're making their plan much more complicated than it has to be. This can be in the form of too many technical indicators. This can be also in the form of listening too much to news or relying on news, or thinking you have the best strategy or system in the world, or even subscribing to some technical guru and copying all of their trades. So there's just too much of things that are added on. And this was what taught to me by select traders on the floor when I first started trading as well. These were the secrets of these specialists that I learned from. And what they really said, the secret to success is not about adding things to your trading plan, but it's more about taking things away and keeping things as simple as possible and sticking with the real fundamentals and methods that have lasted through the ages. And so that's what I'm going to really share with you. And many of the things I'm going to be sharing with you, I'm sure you've already heard of, I'm sure you've seen, I'm sure you practically may have even used already. But that's okay, because it's not about the most advanced technical indicator or the newest chat or trading room. It's more about the execution. I don't know if any of you play sports, but if you listen to any professional athlete on a team, they'll say it's not so much that we have to study the other team and know exactly what they're doing. We've played them tens and hundreds of times before. So it's not so much that we don't know what they're going to do and they know what we're going to do. It's more about the execution. So that's the same thing in trading. You basically can use the same things that have worked, through the test of time, but are you executing them properly? And I think this is why most people are really having a difficult time. Their execution process, and they're piling up too many things and getting too much involved in news and trading and chat rooms takes them away, loses their focus. So my edge is basically what I'm going to be sharing with you. It's to teach you. My goal is to teach you how to trade with the specialist edge. This was what was taught to me on the floor when I was trading there and just beginning trading. And I met a few elite trading specialists that were basically, just the foundation of everything at specialist trading. And they were teaching me the same things. Stay away from all this noise, all this external information. The only thing you should be listening to is the chart you're looking at. Okay? All right, so in the coming weeks, we're going to be having more and more webinars, and here's what you're going to be learning. I'm going to share some of these edges with you today. Now, edge number one is an edge specifically designed to keep you on the right side of the market. So hopefully you won't have to say, boy, why did I just buy the euro dollar? I should have been selling, and vice versa. This is a great edge, very simple edge, designed to keep you on the right side of the market. Now, the second edge we're going to give you is a setup for a 3 to 5 day move. Now, I know everyone doesn't, like to specifically maybe trade in this time frame. Some traders like to trade, smaller time frame, anywhere from an hour to 2 hours. Other traders would like to be in the trade 3 to 5 weeks. That's okay. This edge can be used for any direction in any time frame. We're just going to share it with you on a daily kind of a swing trading mode today. But you can apply this with a few little variations to any time frame you'd like. Okay? In the coming weeks, we'll also tell you how to fine-tune your entries. It's not so much to know to be on the right side of the market and to have an edge, but you're also going to have to fine-tune the entry. All right? And then lastly, we'll show you a really great exiting technique. This is an exiting technique designed to capture a quick momentum move. So we'll share that with you. And then ultimately, we'll put everything together and create a trading strategy out of all the information I'm giving you. And out of this trading strategy, I'm going to show you the results, because this actually comes into one of our most basic strategies that we have, but probably one of the most successful strategies we have at specialisttrading.com. Okay, so I'm going to put all that together for you in the coming weeks. Today, we're going to just share with you the first two most basic edges. And as I said, I'm sure you've heard of these and I'm sure you've seen them before, but that's not the point. The point is, how do you execute them? There's so many people that know what, you should be trading with the trend. They know that you shouldn't be trying to pick tops and bottoms or whatever, but they continue to do it, or they continue to practice that philosophy, or they continue to add on to losing positions. It's all about execution. Okay, so I'd like to start out. Let's start at the presentation now. Let's look at this chart. And I want to ask you, has this ever happened to you? This is a daily chart here of the dollar yen, and as you can see here, we've had a really nice decline. Now, this is an older chart here, but we've had a really nice decline. And you've been looking at the dollar yen and you've been thinking, boy, when is this thing going to stop? I want to jump into this, but I don't want to get in too early, but I need some type of, message or something to tell me that it's okay to get in. And all of a sudden you have a really nice, strong up day. And maybe you're listening to some news or some commentator on TV, or perhaps, you're in a chat room and they're saying, oh, you got to buy the dollar yen. It's going to take off. So you jump in. You think this is the bottom. I want to, get in while, it's cheap and hopefully it'll really rise really nicely. So you jump in and you purchase the dollar yen, and lo and behold, look what happens. The minute you buy it, kind of stalls, and by the end of the week, it's making lower lows. I'm sure that looks familiar to some people, right? How about this? Here's the British pound. British pound's been going straight up in this particular example here. All right? You haven't been doing anything. You missed the long trade, so you're not long this, but you want to catch it, once it tops out, in your opinion, you want to go short. You want to sell. All right? So now it looks like it's finally starting to roll over, as you can see. As I said, maybe your chat room, everyone is saying you got to short the British pound. It's going to fall out of bed. It's too overbought. Okay? There's no reason why the British pound should be this high. Or you listen to some fundamental news and it says that it's a terrible purchase. You should actually be shorting it. So you want to, short it while it's at these high prices. So you short the British pound, and look what happens. It's going on to making higher highs later on. You just happen to sell right at the low of that little sell-off. Okay? I'm sure everyone has seen this at some point. All right? What if there were a tool or some type of, advantage or an edge that could keep you on the right side, so that you weren't, buying, or I should say, selling the British pound when you should have been buying it, and vice versa with the dollar yen? Well, there actually is This is our first edge. This is the buy-sell line. All right, this is an extremely important tool that we use at Specialist Trading. In fact, all of our strategies, all of our methods, everything is defined by this buy-sell line. Okay, it's that important. We use this in virtually everything. It's so important, but at the same time, it's extremely simple. It's very, very simple, and the way to remember that is because it's just a 50-period simple moving average. That's all it is. But here's what we want you to do. Before you take a trade, before you analyze anything, before you listen to some trading guru, before you do your analysis, plot a 50-period simple moving average on the chart you're looking at. Does not matter if it's a 10-minute chart or if it's a monthly chart, but we want you to plot that chart, or that moving average. And here's what you have to do. In order to use the buy-sell line properly, all you have to do is ask yourself this question before each trade. You might want to write this down, but you have to ask yourself this question. You simply cannot blindly go in and buy or sell. And the question is, where is price in relation to that buy-sell line? Okay? Where is price in relation to that buy-sell line? And you're only going to come up with two answers, because if price is above, then you will only be looking to buy. If price is below, you're only going to be looking to sell. This is how simple this is. But I guarantee you 99% of you probably do not follow this rule. Now, when we say you're only going to be looking to buy, we don't mean you're going to buy at the market the minute it goes above the buy-sell line, or you're going to short the minute it goes below. We're simply saying that if price is above that 50-period simple moving average, you're going to be looking for buy setups or buying opportunities. If price is below, you will only be searching for selling opportunities. But you're not going to try and pick a top, and you're not going to try and pick a bottom. It's a recipe for disaster. It may work 9 times out of 10, but that 10th trade, you'll give everything back. Trust me. All right, let's look back at our old examples again. Here's that dollar-yen example I gave you earlier. Now remember, we originally wanted to purchase this because we thought it bottomed out. But then look what happened. We had a nice little bounce that quickly faded out. And after that, we were left holding the bag, and we thought we were picking a bottom, and it turned out to be a loss. Now, what if we had added the buy-sell line? All right, we add our buy-sell line, and we ask ourselves, where is price in relation to that buy-sell line? Well, price is below. All right, so we have no business at all even considering buying. We should be only looking for sell setups. Okay, do you see how simple this is? How about the other example in the British pound? All right, originally we thought, hey, this thing is way too high. It's overbought. All the indicators are saying this thing is overbought. The trading guru I subscribe to is telling me to short it, so I'll copy his trade and I'll go short. And then look what happened. It started to bounce, and you shorted right at the low. Well, if we had simply applied the buy-sell line, as you see here, we'd ask ourselves, where is price in relation to this buy-sell line, 50-period simple moving average? Price is above. So if price is above, we have no business even considering selling. We're only looking for buying opportunities. All right? So you see how simple this is. I'm not going to tell you that this is guaranteed to work 100% of the time. Nothing is. But this will really raise your probabilities for success. I'm seeing some questions one by one. Please wait till the very last 10 minutes, and I promise I'll answer every one. Just remember your questions. Okay, so this is one of the things that will elevate your trading just by simply applying this rule. Now, I know a lot of traders will say, I've heard of this before. Some of the online courses I've taken say to use a 20-period simple moving average. Others say to use 100 or even a 200. What's so different about this? Remember, there's nothing new or different about this. But as I said before in the example, it's all about execution. Go back and look at your winning and losing trades. If you have a record of them, go back and look. And I guarantee you, if you went long and you lost, most of those will be below the buy-sell line. And vice versa. If you shorted and it turned out to go against you, I guarantee you it was probably because you were above the buy-sell line. So, it's not about this being the newest and most advanced indicator that no one's ever heard of. It doesn't matter. What matters is if you're able to execute it properly. So many times I've taught this to students, and they still have problems with it. I'll have a mentoring student who will love what we do, and then, they'll go in and see, boy, this strategy fits perfectly. Everything falls into place. All the rules are all met. I'm going to go long. And I say, what's the first rule? Ask yourselves, where is price in relation to the buy-sell line? And then they see that whatever they're looking at, the euro or the Australian dollar, is below the buy-sell line. And I said, that's not a valid setup. You can't go long. So you always have to remember that, okay? All right, so that was our first edge. Simple as it may be, extremely, extremely powerful. Let's go on to our second edge now. So we're step by step getting more edges here to construct our top trading strategies. Our second edge is simply a candlestick pattern. And I'm not going to tell you that all candlestick patterns are edges. I use only maybe one or two candlestick patterns in our strategies. But this particular edge we have found to work very extremely well with our particular strategies once we put all the rules together. And this is simply something you've all heard of before, a bullish engulfing pattern. Nothing new, nothing advanced. I'm sure everyone has seen and used a bullish engulfing pattern before. Just to refresh your memory, or for those of you who aren't familiar with that, a bullish engulfing pattern, it's a two-bar pattern. And what you're going to be doing is you're going to be seeing if it's a bullish engulfing pattern, what you're looking for is a down day, or where the open is higher than the close, or the close is lower than the opening. And you have this dark body here. And then the very next day, the opening and the close, the open body completely engulfs the previous day's dark body. That's simply a bullish engulfing pattern. When we only look at the bodies, we're not concerned with the wicks at all. We're only looking at if this body engulfed the previous day's down body. All right? Now, if that happens, the odds are, remember, it's not guaranteed, but the odds are telling us that we have a next 3 to 5 day high probability for continuation in that next direction. If we're looking at a half-hour chart, well, then the next 3 to 5 half-hour bars have a high probability for going in that direction. Okay? So it doesn't matter what time frame. It doesn't matter, if we're looking at daily bars, monthly bars. It's just the next 3 to 5 bars should continue in that direction. There's a high probability for that. Same thing works with the reverse. This is a bearish engulfing pattern. Nothing new, nothing advanced, but the same concept, except you flip the coin upside down. Here we have the first day, which is the upper day where we open and then close higher. So this is an open body. But then the next day is followed by the engulfing pattern to the downside. We have the dark body where we totally engulfed the previous day's upward action. Now, this should result in the next 3 to 5 bars or 3 to 5 days, if we're looking at daily bars, to the downside, a very high probability. So this is a nice edge. It doesn't work 100% of the time. And all we're looking for is, once again, an edge to increase our chances for success. So coupled with the buy-sell line, we've now added this edge of the engulfing patterns. Okay? So let's look at a couple examples here. Here's the Australian dollar. Now, what did we do? We have our buy-sell line. Okay? We ask ourselves, where is price in relation to the buy-sell line? Remember, if price is below, we're only going to be looking for shorting opportunities. But in this case, price is above. Okay? So now we're looking for our second edge, which is the bullish engulfing pattern, as we have here circled in green. Now, in this case, we had a very nice run-up, lasted longer than 3 to 5 days. And at our website, we show you how you can capture and exit with quick gains, or how you can stretch them out and go for longer gains if you like. It's up to you. Remember, this is just two edges here. This is not a strategy yet. We're only showing you how to apply these edges together. If we look further down the road here, we see we have another setup. We have another bullish engulfing pattern circled in green here. And as you can see, they continue to go higher. So you see how when we put these two edges together, even though this is not a strategy yet, we have not told you how to enter, we have not told you where to place your stop, we have not told you where to exit. You see now how you've increased the odds for success in your favor now. Let's look at it the other side. Here's the dollar Swiss franc. What's the first thing we ask ourselves? Where is price in relation to the buy-sell line? If price is above, we're only going to look to go long. Well, if price is obviously below, so this means we're going to be looking to go short. All right, so if we're looking to go short, we look for our first edge, which is the bearish engulfing pattern, which we have circled in green here. As you can see, we had a nice move to the downside. Now, I just want to point out that this does not often happen, but many times, you will get something, work out to the opposite. In other words, you'll get a bullish engulfing pattern below the buy-sell, and it will work. But oftentimes, most often, this is what you'll see. If you get a bullish engulfing pattern, such as we have right here, look what happened. We basically went sideways to up a little, but there really wasn't much room for any type of significant gains, and then the trend went lower. See, all we're trying to do is be in sync with whatever trend we're currently in. And the main way to our main tool for finding out the trend is simply the buy-sell line. That's it. Okay, there are other tools and indicators we have, but in this very basic example here, we're just looking at the buy-sell line. So, why would you want to, waste your time trying to pick a bottom when so many times you'll see it'll just go nowhere, and then you'd get stopped out for a loss. Now, if we stay in tune with the trend, we're only looking for bearish engulfing patterns. And as you can see, here's another bearish engulfing pattern, and look what happened. It did go in your direction. So, see, trading is a lot simpler. It's a lot easier once you just try and be in sync with whatever you're watching. This is what was taught to me on the floor. I think when I first began, I pretty much traded just like everyone else. I tried to pick tops and bottoms, and I would have fantastic months followed by disastrous months. And I would do this. I would go 2 or 3 months making really good money, and then I'd have 1 month where I lost it all. And trading shouldn't be like that. It should be very consistent. It should be, not going for home runs, just going for nice consecutive months of positive gains, and so that you're around for trading for a much longer time. I know a lot of traders. I always tell this to my students. I know a lot of traders that made millions and millions of dollars in months, and many of them, I would say most of them, have lost it all. So it's not about hitting those home runs. We're just looking to capture quick momentum moves and small gains, small singles. Okay, and this is the easiest way to do that is by being in sync with the trend. This is what was taught to me. And by following these very simple and basic rules. Once again, you can see here, we have more examples all the way down. Once you're still in sync with the trend, it continues to go further and further. Now, I know many of you will say, well, Steve, you don't point out here at the bottom, you have a really nice bullish engulfing pattern, and look what happened. You had a nice rally after that, but you were below the buy-sell line. We're going to be missing those trades. I told you, this does not work 100% of the time, but I guarantee you, if you had taken those previous trades, roughly here and here where you lost, you would be so out of sync, you would probably miss that trade, and it's not worth it. Why would you, try to pick bottoms and basically break even after having 2 losers and maybe 1 winner when it's not worth it? You're spinning your wheels. It's much easier. You're going to sleep better at night if you just stay in sync with the trend. Okay, as you can see here, we had another losing trade here until we finally started to bottom out. All right, so let's recap here. I gave you 2 edges so far. All right, we talked about being on the right side of the market. That's edge number 1. That is our buy-sell line. And what does that mean? It's a 50-period simple moving average. I don't care what time frame you're using. If you're using a 5-minute chart, a tick chart, a range bar chart, or a monthly chart, does not matter. Add that 50-period simple moving average to any chart you're looking at, and then ask yourselves, where is price in relation to that buy-sell line? If price is above, you will only be looking for buy setups or buy situations. If price is below, you will only be looking for sell setups or selling situations. Okay. Our second edge here was great for a 3 to 5 day move. If you're looking at daily bars, it's basically a 3 to 5 bar move, and that is simply the candlestick pattern or the bullish or the bearish engulfing pattern. It's a great pattern, but you have to know how to use it properly. As we showed you there, most people will be using it and think, oh, this is a great technique to find the bottom. And what they'll do is they'll use it and they'll get stopped out with a loss. They'll do it again and they'll get stopped out with a loss, and then they're missing all these great trades with the trend. So use it only when you're in sync with that buy-sell line. Now, next edge is what we're going to present in our next webinar. We plan to be having these webinars. I believe our next webinar will be next month. But if you really, if we get enough, I believe if FX Street gets enough, calls and letters and emails, if you want to have more of ours, we can probably have these webinars sooner or have more of them. But the next edge I'm going to be covering in the next webinar will teach you how to fine-tune your entries. Now, most people, would see these things and say, wow, this is great. We're below the buy-sell line. I have a bearish engulfing pattern. I'm going to just jump in. And that's the wrong way to trade. We show you where you should be entering and where you should be exiting, where to place your stop and everything. So the next presentation I will be giving will be edge number 3 on how to fine-tune your entry, because that's probably one of the biggest mistakes people make with candlestick patterns is how they enter into the trade. And this is a priority with us, is how you enter. You simply do not buy at the market or chase something or try and pick a bottom. Okay? All right, as promised, we've gone through a half an hour here. I want to save the last 10 minutes or so for questions. This is my email address. If you would rather email me, you can always email me at stephenprimo@specialisttrading.com. Any questions you have, I'll answer them right now. I know some of the people were asking, different questions. I see right now, what time frame do I prefer? When I'm, trading stocks, I prefer daily bars. When I'm trading the Emini, I prefer small intraday and tick bars. And when I'm trading the Forex markets, I actually prefer all. The great thing about the Forex markets is because of the trends involved and the way they will move, they these concepts can be used great on an intraday chart. So I prefer looking at both of them. Actually, I had some really nice setups today, this morning, on some trades looking at tick bars in the Forex markets. Also, we had a current trade where we were short the euro dollar on the 4th at 1.3290, looking at a day chart. So these were all signals that we provide, and these were all using our strategies. Once again, they can be used in any time frame and in any direction. Someone's asking, can the buy-sell line be a 21-period EMA, or exponential moving average? It can be. Here's the one thing I want to say about the different buy-sell lines. I know that, as I said earlier, a lot of teachers have different time frames. They'll say 20 periods. Some will even say 10. Some will say a combination of 2 different ones. That's fine. 21 is fine. Just know that the smaller time frame you go in a moving average is going to be geared toward what type of a trader you are. In other words, if you're a swing trader or using daily bars or even a longer term, I wouldn't suggest using a smaller, moving average like 21. So you would, if you're a day trader, if you like to look at intraday charts, I believe at 21 would be fine. If you like to look at longer term charts, anything from daily to weekly to monthly, I would say use something from a 50 to 100 or even a 200. But the basic concept is, you're using that as a guideline of whether to be long or short. That's the most important thing. It's not like there's some magical number. And 50 is why I use 50, is because it pretty much encompasses any time frame you want. It's right there in the middle. You can use it for daily, weekly bars. You can use it for tick charts. It's a great, great tool. So I would always suggest 50 because it pretty much encompasses anything. I'm trading the Forex right now using 2155, plotted 50 SMA with my charts. Interesting. Yes, I know it will be interesting. And as I said, I would like all of you to go back and look at your trades, your recent trades, the ones that have been closed. See the ones that you made money off, see the ones that you lost, and see if there's any correlation with that buy-sell line. Okay? I guarantee you're going to be having some interesting things. You're going to notice some very interesting setups and stuff. Now, it's just a piece of the puzzle, though. I don't want you to think that the buy-sell line is a strategy in itself where if something is above the buy-sell line, you just go and buy it at the market. It's not meant to be used that way. It's just a really good tool and a very simple but powerful tool. Let me backtrack here to see some of your questions I may have missed. Does the 50-period simple moving average need to be trending up or down, not flat? That's a very, very good question. The question is whether there needs to be some type of trend with the 50-period simple moving average. I have found, personally, that when you have a nice upward slope, as I showed you in those examples, and prices above, you have higher chances for success, as opposed to the slope of the buy-sell line just kind of going flat or sideways. So if you want to increase your chances of success, it's better to have a nice upward slope to the buy-sell line if you're buying. If you're having, looking for short setups and prices below the buy-sell line, it's much better to have a nice downward slope. This is just telling you that, the trend is fairly strong. That's all it's telling you. There's nothing magical. There's nothing statistically correct about it. It's just visual. And once again, this is what I wanted to stress, which was taught to me. This is what the market is telling you. So much of the reasons why we lose as traders, and so many traders are losing, is because we're listening to the wrong, sources. We're listening to a lot of noise. I feel, in my opinion, traders go to too many chat rooms, too many trading rooms to try and get information from other people. Now, this webinar is an informational tool, but I want you to go on your own and go run with it and go use it. I'm not telling you to trade the way I do, but so many people think they have to copy or mirror some trader in a trading room or some trading desk or listen to some guy on TV. These are all external, information. You should be listening to only one thing. That's the market in front of you. So if the market in front of you, plotted with the buy-sell line, has a nice downward slope, the market's telling you that there's a strong downtrend to the downside. So the odds are you should be shorting this. You'll get a nice, run to the downside, and vice versa. So listen to the market. I'm just trying to teach you the basic things that will help you to listen to the market. But ultimately, the decision is going to be yours, not mine. Okay? Let me see some more questions here. I'm trading Forex right now. Oh, no, I got that one already. Or it says, or use two moving averages and look for proper order of the moving averages. Yes, that's fine. I know that there are many people that like to use two when there's a crossover or one is above the other. That's fine. All we're trying to instill in you is that you are in sync with the trend. That's it. And if most likely, if these moving averages are out of sync with each other or you are below them, means that you're not in sync with the market. So I'm just, even if it's another indicator you like to use, we've just found tremendous success with the buy-sell line. So we're just trying to say, be in sync with the market. Just, Bill Williams, in one of his books, it was talking about trading, said, just do what the market wants to do. That's all. If you're looking at the, the Australian dollar and it wants to go up, well, then you want to buy. You want to go with it. If it wants to go down, well, then you want to sell. Just do what the market you're looking at wants to do. That's how easy trading should be. Very simple. Okay, let's see here. Let me see if I've missed some more. I'll kind of backtracking on this. What time zone is the best for candle close and open? Okay, I assume when you're saying what time zone, are you talking about what time frame, in other words, time frame to use the candles? As I said, I look at candles on a 1,000 tick bar, or I look at candles on a daily or even a weekly. So the concept works in everything. But as soon as you apply these other edges, now I haven't given you all of the tools to actually start trading this yet, so I don't want you to start running away with it. These are just pieces of the puzzle. There are many more things I want to add to you in terms of money management, how to enter your order, different ways in which to exit. And I will show you the results of using this at the very end and how they've been very positive for us. But, the time zone or the time frame, as I said, works in anything, but it's not so much just relying on the time frame. You have to put the whole package together for it to work properly. Okay. Any more questions while you have me here? Let me just see if have you ever sold when price was above the 50-period simple moving average? Yes, I have. Not recently, but as I said, I started out trading probably just like 99% of all traders do, trying to pick tops and bottoms. And obviously, when I was trying to pick a top, it was well above the buy-sell line. And that would work really well for a while. And then the first time it didn't work, I'd get killed and I'd lose everything that I just made. And so, why should you go through that? Trading shouldn't be like that. You shouldn't, have these really great months and then, be afraid to tell your wife that you lost it all. It's not, it's supposed to be that complicated and that difficult. It should really be very simple and basic and very consistent. And we're trying to add this level of consistency into trading. And the best way to do that is to be in sync with the market. Why not the EMA or the exponential moving average? I have found through my experience and what I was taught when I was on the floor is that the simple moving averages work much better. They're much smoother and they're easier to read. Okay, so that's why I use it. If you have success with the EMA, that's fine. We're never going to tell people what not to do. Will you be teaching us a range strategy too? I won't be actually teaching a range. I'm just going to be telling you that you can use any of the strategies that I will be teaching or that we do have on our website in any time frame, in any range bar or any type of bar you're looking at. They can be applied to anything because we're using these simple concepts that have stood the test of time. Okay. Now, our strategies are just basically built for, open, high, low, close bars, but you can apply them to range if you'd like. You're going to get different results, but this may turn into a lot more trades or may turn into less frequency in your trading. It all depends on what you like. Okay, so even though my strategies are constructed just for open, high, low, close, we do have some things that use candlesticks, and you can apply them to range, tick bars, whatever you'd like. Okay, any more strategies before I believe we have to sign off here? Can't wait. Oh, yeah, great. You know, like I said, we will probably be having one, I believe, next month. I believe we're scheduled for the first Tuesday of each month. If we get enough feedback, maybe we can have that increased and I can give you more and more information. In closing, I just have about a minute left to go here. If there are no further questions, I just want to tell you a little bit about my site. If you haven't checked it out yet, I invite you all to come and to look at my site. As I said, it's specialist trading, and I give courses. It's an online course site for stock trading, E-mini trading, and Forex trading. Simply punch up either of these tabs, and you'll see the examples we have of recent trades. Now, we have detailed instruction in all those markets. I have numerous Forex strategies for you to trade. If you're a short-term, an intermediate, or a long-term trader, you can use different strategies to fulfill your needs. We have updates and signals, but they're mainly for educational purposes. You know, as I said, we gave a short signal in the euro dollar on the 4th, and we gave a short signal in the euro yen just a couple of days ago, but they're mainly for you to understand and learn the process. We want you to do all this on your own, ultimately. Now, I have weekly webinars, archive videos, and remember, this is a lifetime membership. This is not something that I'm asking for a monthly subscription. Once you pay, you're a lifetime member. So, in order to find out more, simply visit my site, specialisttrading.com. And if you're really interested in becoming a member after you visit the site, we're having a special 20% discount for the next 48 hours, the first 20 people only. So you can either register online or you can call my associate Brett at 310-844-7220. Okay, that's it in a nutshell. If there are no further questions, I thank you for joining me today. If you do have any other questions, I assume you've copied down this number. And let me just give you my email address one last time. So if you happen to come up, I know many of my students will say, you know, thanks for the session or for mentoring, and then they'll forget how to contact me because they had another question. So if we look at the disclaimer one last time, I also want to give you my email address, which I believe is the other slide. I'll go backwards. There it is. So if you have, once again, any questions, do not hesitate to email me at stephenprimo@specialisttrading.com. And as I said, I believe I'll be back here the first week of February. Use the information I gave you, experiment with it, do some homework, go back and look at your current trades, and then have some questions for me, and I'll be happy to answer them. Okay? Thank you so much for joining us today. Visit my site, and we'll see you next time. Bye-bye.